All right, good evening, everybody, and thank you so much for joining us for our first ever live event where we sit down with some of our subject matter experts. My name is Yaritza, and I am the digital marketing specialist here at Foothill Credit Union. And for today's event, we have joining us our one and only real estate loan officer, Vahan Malakyan.
Hello everyone, my name is Vahan Malakyan. I am the real estate loan officer here at Foothill Credit Union. Just a little background about myself. I've been in the mortgage industry since 2006, so about 16 years now. After the market crashed, I ventured off and did a little bit of loss mitigation, did a little bit of post-closing, underwriting, processing, eventually found myself back into the originating position, and eventually found my home with Foothill Credit Union, and I've been here for about 6 years now.
Great. So for today's event, Vahan will be answering some of the most commonly searched for questions on Google about refinancing your home. Not only will he be answering those questions, but he will also be answering any questions you may have about refinancing your own home. So if you have any questions or any comments, please leave those questions or comments down in the comment section, and he will be answering those throughout the event tonight. So with that being said, let's go ahead and get started with our first question that we have. So Vahan, for our first question, does refinancing hurt your credit?
Not necessarily, no. With credit, credit can vary. It can go up and down within a 30-day period. So let's say you charge a little bit extra on your credit card. It might show a couple points lower, it might show a couple points higher once you pay off some stuff. So with the refinance, imagine you're replacing your existing mortgage with another mortgage. So if you do lose a few scores here or there, you're going to gain them back once the new mortgage reports. So I would say no, not necessarily hurt your credit at all, actually.
Great. So for our second question, is it even worth it to refinance?
Everyone's situation is a little different when it comes to refinancing. Now, refinancing might not be for everyone. So I would say it would be worth it for you depending on your goals. Now, a lot of people, and the most common reason why people refinance is for cash out, whether it be to consolidate their debt or home improvements or put money away for college. So it can be worth it for you. You would have to reach out to your loan officer or myself, and we can look at your scenario. Everyone's situation is a little different. And I would suggest ever so often revisiting your mortgage and seeing if it's worth your while to refinance.
Great. So third question, how can I avoid refinancing fees?
Good question. There are lenders out there that offer no closing costs refinance, where they will cover the closing costs or waive them completely. But again, it depends on your situation. Sometimes paying some closing costs, minimal closing costs, will be better than a no closing costs option. So consult with myself or your loan officer, and they'll tell you which is a better fit. But there are options out there where you can avoid costs completely.
Awesome. So question number 4, why are closing costs so high on a refinance?
My question to that would be, compared to what? What are we comparing it to? With Foothill Credit Union, our standard closing costs are very minimal. We have your title, escrow, processing fee, appraisal fee, typically run you anywhere between $3,000 to $3,500. Now, there are some lenders that do charge more for refinancing. We call them points, or it could be origination fees or underwriting fees. It's important to find out not only, of course, what the interest rate is going to be, but what are these costs involved. And again, with Foothill Credit Union, the costs are minimal. We're here to benefit the members, so we're going to give you a good interest rate with low closing costs. But inquire, I would say, definitely ask those questions. How much is this going to cost me?
Perfect. Question number 5, can you roll closing costs into a refinance?
Yes, you can. So escrow, title, sometimes you are responsible for your own appraisal fee, which can run anywhere between $500 to $650 depending on size and location of your home. But yes, most closing costs can be rolled in. Now, if you have the money, if you have a little bit of extra money, I mean, who has a little extra money nowadays anyways, but if you have the money and you could pay for those costs out of pocket, I would suggest doing that, just so you don't finance them. But for the most part, people do roll in their closing costs in the loan.
Awesome. So question number 6, do you pay escrow when refinancing?
Yes, you do. So any real estate transaction in California, there has to be an escrow involved. For those of you who don't know what escrow is, they're basically a neutral third party that will handle all of the money in the transaction. So they'll take our loan, pay off your existing mortgage, and give us a detailed accounting on what's being paid where. So every time there's a real estate transaction, you have escrow fees and title.
Awesome. So number 7, how do I know if I paid points on my mortgage?
Great question. With points, the first thing you should be asking your loan officer is for a loan estimate. Now, this loan estimate is the standardized form. We all use it. It just has a different company name on the top, but it looks the same whether you go to Chase or with Foothill Credit Union. You want to ask for a loan estimate. On the second page of the loan estimate, it will detail all of your closing costs. And under line item A, like Apple, it will show you if there are any points involved with the transaction. Now, points are, you don't have to pay points. Points can be avoided with taking a little bit higher interest rate. So it all depends on how your loan is structured. And if someone tells you have to pay points, that's not true. You can always take a little bit higher interest rate to avoid paying any points. But the more questions, the better.
Perfect. So next question, do you pay taxes when you refinance a house?
I'm assuming the question is referring to if you're pulling money out of the transaction, you do cash out refinance. That's the most commonly asked question I get, or one of the most common ones. You are not going to pay tax on the money you pulled out. Imagine it's like a loan. You're obtaining a loan, so a mortgage is the same way. You already have your property taxes you're paying on, so any cash out you take for your home improvements or consolidating your debt, more than likely is tax-free. So consult with your CPA just to be on the safe side, but in my experience, you don't pay tax on money that you pull out. Your property taxes, they're not going anywhere. Unfortunately, they keep going up. We're always paying them, whether it be monthly through your payment or twice a year out of pocket. Those are always going to be there.
Awesome. So question number 9, can I refinance my house without a job?
Well, if you're the only one on the application, you have to be employed at the time of the application and the time of the closing. So let's just say you were on disability last year, it was temporary disability or unemployment, and you're back to work now, you're receiving your paycheck every 2 weeks or whatever the case, that's fine. There's a gap of employment, you weren't working at the time, that's fine. But at the time of the application, you have to be working in order for you to qualify.
Got it. So what doesn't count? So like disability?
Disability would be one, temporary disability. Long-term disability can be used. The other one is unemployment. We can't use. A lot of parents, new parents, paternity leave, maternity leave, those incomes can't be used. You can be on the loan, let's say there's 2 people on the loan, one person's employed, the other isn't, that's totally fine. We will qualify based off that person's income that has the income. So you could be on the loan, but if you're only by yourself refinancing, you're not going to be able to unless you have a steady paycheck coming in.
Sorry guys, guess it's a no. So question number 10, how long does a refinance take after appraisal?
Depending on the lender you're working with, and also depending on the timing, I guess, of the year. Last year we were all inundated with files, and the typical refinance time frame is about 30 days. So within the first week, the appraisal's ordered. I would say it takes them about a week or so to complete the report, get it back to us. So at about 3 more weeks after the appraisal, you should be able to close escrow. But consult with your loan officer, consult with myself. Right now with Foothill Credit Union, we're about 30-day turnaround time, 30 to 40 days maximum. But keep asking those questions, and yeah, 30 days.
Great. So next question, should you refinance an FHA loan?
Definitely. After getting an FHA loan, I would wait about a year or so and check in and see if you can refinance, because FHA has private mortgage insurance. For those of you who have FHA loans, know about it. It could be a couple $100 up to $400 a month. You would want to refinance to go into a conventional without PMI eventually. So I would say about a year after you purchase your home, double check with us, your lender, and see if you can refinance out of that FHA loan.
Awesome. So question number 12, do you have to refinance with the same bank?
No, you do not have to refinance with the same bank. You can refinance with the same bank if you have that relationship with the mortgage banker or lender. You can go elsewhere. Refinancing with the same bank could be a little bit easier. We have that established relationship. We can go back and pull some documents that we took from last time. But up to you. You folks can refinance with anyone.
Great. So next question, should I refinance if I only have 5 years left on my mortgage?
It depends. So it depends why you're inquiring about refinancing. And this goes back to what I said earlier about your goals and what is it that you're looking to do with this refinance. If you're telling me you have 5 years left, you don't need any cash out, you don't want to consolidate any debt, there really isn't a shorter mortgage term out there, I would say no. But if you're looking to pull some money out for home renovations, kids' college funding, put it back into the home with renovations, whatever the case, or buy another property, I would say yes, it's in line with your goals. So consult with your loan officer, and I'll tell you exactly if it's going to be worth your while or not.
Great. So last question, number 14, what should my credit score be to refinance?
The higher the credit score, the better. We want to see 750 and above, but that shouldn't discourage you from inquiring, because there are instances where you can refinance and still get a good rate if you have a lot of equity in your home, or if you're not pulling any cash out. So a lot of times people will tell me, Vahan, my credit's not so good, I'm in the mid 600s, I don't even want to run it. I'm going to encourage you to check, because a one-time check is really not going to hurt your credit, and you might be surprised. I've had instances where people had a lot of equity in the home and they didn't need to pull any cash out, so they were still able to get my best rate. Credit scores really matter when you're at the higher loan to value ratios. So with a refinance, with a cash out refinance, you could cash out up to 80% of your home's value typically. So let's say if you're at that 80% or 70 or 75, then you would want to have those better credit scores, or the higher ones. But if you have plenty of equity, you're just not sure where your credit is, let's check and see. You might be surprised. So I would say minimum score is 620. Call us and we'll tell you.
And the way that you guys get, in general for mortgage, the way that you get your credit scores is a little different than applying for an auto loan. Is that correct?
That's true. With the mortgage, well, it depends on the place, but
Right.
usually when you're a consumer loan, like an auto loan, personal loan, credit card, they'll do an Experian check or one agency check. My systems are a little different. I do a detailed tri-merge report, is what we call it. So all three credit agencies will report, and we're going to go with the middle credit score. So if there's two applicants, two people on the loan, we're going to do the same thing, run all three scores, and use the middle scores, but the lower of the two.
Awesome. And would you tell people to trust like Credit Karma and those types of places?
Depends. Yeah, in my experience with Credit Karma, Experian.com, NerdWallet, there's a couple others out there. If I see high scores on Credit Karma, more than likely it's going to be high when I run it. When I see mid 700s to low 700s, 600s, it honestly could go either way. So they do offer that monitoring service, so where if someone runs your credit, you'll know, which is a good thing about them. But I wouldn't really trust the credit scores you see there too much. Again, one-time check for a mortgage is really not going to hurt your scores. Every 30 days, credit not necessarily resets, but recalculates, and one inquiry in 30 days is not going to hurt you. So use Credit Karma and those other services, but if you're not sure, call me, we'll run it, and we'll see where you are.
Great. So that wraps it up for the questions, as in the most commonly searched for questions on Google. But my question to you is, do you have any recommendations for our viewers or any suggestions about refinancing their homes in this market today?
I would say revisit your mortgage ever so often. Sometimes, when you buy a home or when you do your last refinance, it's probably the last thing on your mind a year or two down the line. But understand that your home is there to help you in life, honestly. I mean, you can achieve a lot of different things by cashing out money, putting it into other investments, buying another property, cutting the term if you want to pay off your home sooner. I always encourage every year or so, every other year, don't wait to hear from someone they got a good rate to go and refinance or inquire about it. If there are some goals in life you want to meet, you can use your home to help you meet those goals. So look into the mortgage ever so often. It doesn't hurt to check it once or twice here and there. You'll be surprised. Sometimes there'll be programs out there that could help you obtain whatever goal that you're out to do. So call us or call me and we'll take a look at it.
Awesome, great. All right, well, that basically wraps up all the questions we have. If you guys do have any questions, please leave them in the comments. But while we wait for any questions to come through, do you want to let them know how they can reach out to you?
Yes, definitely. So I'm a little old school. You can pick up the phone and call me. If I don't answer, leave me a message. I'll call you back. Or if you're busy at work, on your screen you'll see my contact information for my email. That's my direct line there. But most times, phone conversation is going to be the best way to go, so we could answer all your questions and address any concerns you have.
Yes, great. So, well, that brings us to the end of our event. But before we let you guys go, we do want to let you all know that we have a home buying webinar coming up, and it is being presented by our one and only Vahan Malakyan. It's on Wednesday, March 16th at 6 p.m. So if you know anybody who is looking to purchase a home right now in this crazy market, let them know that they can register on our website.
It is a crazy market, but it's a good market. Everyone should consider buying a home. I'm going to encourage first-time home buyers to not listen to the others and wait for prices to drop. Prices are not going to drop in California. It's a good time to buy a home. It's your first home. Any time is a good time is the best thing that I say to others. So sorry for interjecting.
No, you're fine. Main thing, reach out, right?
Yeah, call me or send me an email. We'll figure it out. If it's not a good time now, we'll wait a little bit. It'll be a good time later.
Right. All right. Well, that brings us to the end of our event. Thank you all so much for joining us, and have a wonderful evening. Bye.
Thank you.